Hey sprinters, is Bitcoin crashing? Let's jump to a market update because I got called 12 times just today from people. Hey, what's going on? The stock to flow model is not working and can we rely on it? Should we sell our Bitcoin? Is this whole thing crashing? Let's dive into it. So we are in TradingView, and if we look at this here with the daily candle, it looks grim. We are at the bottom of the Bollinger Band. The moving average is going down. Will this hold? How deep are we going to fall down? We don't know. Or maybe we know. Let's find out. And you see from my state that I am relaxed and I'm not afraid that Bitcoin is crashing. If you look at the RSI 40, that's a very good RSI, right? 30 and below 30 is the buying signal. Let's look at the moving average is going down. Is this a bad signal? It depends. Depends on which wave we are in. This is where we have to be systems thinkers. Systems are always embedded in systems. Waves are embedded in waves. So let's go back to the theory of trading, and this time we visit an old friend. This book I can really recommend you. It's called Wave Principle of Human Social Behavior and the New Science of Socioeconomics by Robert Prechter. And he bases his work on two things, on the Elliot waves and on the Fibonacci retracement numbers. And with a little understanding of that, you can keep your cool also while seeing Bitcoin price decline, knowing that this is a wave 4 correction. And it's perfectly healthy. So let's jump into it. And I've been doing this, if we apply the Elliot waves and the Fibonacci retracements to any asset, we understand the patterns better. We understand the psychology and the mathematics of it. I have been doing this for Bitcoin in a couple ways. Let's look here at what happened during the last big waves, because life is in waves. And the big waves have small waves in them, which are fractal. They have the same structure. It's like a tree has the same structure overall, but also in its leaf. The same thing happens here. Or like snowflakes. Every snowflake is different, but they all have the same structure. Every person is different, but every person has the same structure. The structure actually of a person is 5, 3, 3, 5. We have 5 parts, 1, 2, 3, 4, 5, my legs. And then 3 parts, 1, 2, 3, and then 5 parts. So biology, mathematics, and psychology can help us understand the wave principle of life. But now let's apply this to understand the current day. So if we look at the summer, we have here January, wave 1 up, and then this one 2021 January, 1 up, 2 down in February, 3 up, and 3 is always the longest one. March down to 4, correction as expected, and then 5 to April, and then after the 5 ways up always comes 3 ways down, ABC. And the same thing starts all over again here in August. So that was the structure. And this is exactly the Elliott wave structure. 1, 2, 3, 4, 5. And then ABC down. 1, 2, 3, 4, 5 up, ABC down. So let's look at the next one. We were in August. So we start again in August and count up. 1, 2, 3 up, 4 down, and we don't know when 4 ends. It might end today. because there is this little candle up here, or maybe 4 ends today. Maybe we still go a little bit more down. Today we are at $56,000. We might get to 55. We might get to 54. This is where the Fibonacci retracement levels become important, but I keep it simple for this session today. I'm not surprised to see 4, because after every third wave up comes a fourth wave down. It's always expansion, contraction, and then there will be a 5. And 5 is much higher than what you see here. I was just out of space here to chart, but 5 will be much higher than 3, and the length will be even a foreseeable and a calculable length. So we can be absolutely relaxed looking at Bitcoin if we are holders, and if we are not holders, this might be an entry point. Better would have been 2, but most people missed 2, and let me show you why. There is a psychology of trading, and we are still in the same theory, Elliot waves theory, but Elliot waves and fractals and Fibonacci apply to so many levels of life, not just to trading or investing. So the psychology of trading, and here you see the same Fibonacci levels, the same Elliot waves, right? 1, 2, 3, 4, 5. Let me retrace it with you here. So 1, 2, 3, 4, 5. That's one wave. And inside of every wave, there is 1, 2, 3, 4, 5. So the same pattern, systems are embedded in systems, the same pattern is also in that pattern. But that's the mathematics. Let's stay with this psychology. The psychology, when do the pros enter? And the psychology is best explained with fear and greed. The two main emotions when it comes to investing into money, right? Fear that I don't have enough, fear of luck, fear of missing out, and greed of getting more. Oh, more. These are the two main movements of us humans. And when you're in fear, you cannot feel greed and the opposite. So the pros enter at the beginning of wave 3, and because wave 3 is the longest and the best and the most lucrative. So this is the ideal entry point. But you need knowledge to do that. Either you need to be very good at analyzing Elliot waves and Fibonacci retracement levels, which a few people can do. Just only very, very good and very, very experienced traders can do that. So usually only the best traders, the pros, get that right entry point. Most of us, we wait quite a little bit. The institutions come next because they have teams of analysts, etc. They are the next ones. And then they spot the patterns, right? And then come the funds. And then come the retail investor. We usually, around here, we see it in the newspaper, we see it on Twitter, we see it, friends start calling us, hey, what about Decentraland? Should I go into Decentraland? And this is the moment when we start researching and entering, and usually we enter somewhere in wave 5. So after 4 has happened, and this is the reason why most of us lose money in investing, because they enter too late, and they are also not good at selling. So they are not good at exiting positions, because exiting positions takes discipline, takes guts, and takes courage, really, to say, okay, I went in the wrong place. Let's put it out and put it on stronger, on the right waves, which basically is stronger horses. But it means really on the right wave, on the beginning of the right wave. And so that's the psychology. The psychology is that we are mostly late, and if we are not pros, Don't even try to catch this one. You will not. You will not. I will not. I never catch this one. If I'm really, really good, sometimes I catch it here, somewhere on the way. And then usually I don't, and then I have this chance again. But that's a short one. So the best entry point is this. If you just focus on this, now the day traders and early traders, they can get every sub-wave. But this is not what we retail investors are doing here. So then there is the biology. That was the psychology of trading. Then there is the biology of trading. Same model applied to that. Biology means, remember the snowflake? Every snowflake is different, but the structure of every snowflake is the same. The geometry, right? Then there is the body structure. I have two kids. They are very different, but their structure is exactly the same, right? And then here it's also fractal. So we have this one wave up to 5, 1, 2, 3, 4, 5. But in that 5, we have also, if you just look at this wave, this has also 5 in it, right? It's the same. And in that wave, we have 3 times that wave. 5, 3, 3, 5 are the numbers that Elliot came up with. And these things we call recursion levels. So on recursion level 1, 2, 3, it is the same thing embedded in a bigger recursion level, which is the same pattern repeated in a fractal way. And then there is the mathematics of trading that uses these patterns. So you basically zoom out. You don't get too nitty-gritty. You zoom out. You can even click away the candles and make it a line. Maybe I can show you here how you click away the candles. Because the candles sometimes are too detailed and you miss the point, that you can play around and move in TradingView from candles, for example, to line. When you see line, it's much easier to see. Now, the pattern is clearer. So play around, go from day to week, go back to day, go to month, and then go back to day. And if it's too confusing, if you have too much stuff going on, go to lines, and from lines, you can go back to candles. You can do hollow candles. So play around so that you see the patterns, because it's all about pattern recognition. And when the patterns are here, 1, 2, 3, 4, 5, in it there is 1, 2, 3, 4, 5. See, this becomes now even a fun game. And you know the entry points. The best entry point is always to catch wave 3, which starts at the end of wave 2. That's the best entry point, the first green candle after the correction. And what's happening right now in Bitcoin? The correction from 3 to 4. So the next chance to get the green candle is exactly when 4 is over. And when is 4 over? We don't know. If we were pros in Elliotism, so if we were Ellioticians, we might know it. So this might be the first green candle actually, but maybe the first green candle will be here, maybe it will be here. So we can analyze previous points to find out, and we can use the Fibonacci retracement levels to find out, and TradingView has also Fibonacci retracement level. So we can find out, but as retail investors, we don't need to nail exactly the time. Time in the market beats timing the market. Time in the market beats timing the market for us retail investors, because we will never nail it exactly. But if you enter at 56,000 or 55,000, that's not a huge difference if you think that you will hold this for 5 years. So that's a blip in the context of things. This is a very small difference in the grand scheme of things. And this is why I wanted to share today with you the Elliot waves principles, because life is made in waves, and not just here, but whenever you feel anxious, go back and look at the bigger picture of the grand scheme of things and see where in this context you are right now, and which wave is starting, which wave is ending, and what's next. To sum it up, and if you want to dig deeper into Elliot waves, I can do another video where we go deeper, but basically there are two things. There are expansion and contraction. And Elliot calls the expansion waves, there are two expansion waves. There is the expansion impulse wave, and the diagonal wave. These are the two things that go up. And then you have three contractions, which is flat wave, the downwards triangle or downwards wedge, and the zigzag. And this one, every trader calls the upward wedge. So these are very common geometries of trading, if you want, pattern recognition moments in trading that are used by almost all traders around the globe. And hope that helps to stay calm, not to sell your Bitcoin. This is not financial advice, but this is education on patterns and pattern recognition. Hope that helps. And if you need anything, let me know and I will create a video about it. Keep rolling.